Healthy behavior, living better. I'm sure we're all feeling stress in these days, times, with the economy the way it's been over the last few years. Saving money is an issue for people and has been an issue for people. But it's certainly a proven fact that if we're saving money, we're feeling better. On an average, we lose 21 hours of sleep in a given month. Now, it's probably a wonder that you all feel tired in the morning. It's stressful. And if we don't have a plan and we're not working the plan, the stress of money in people's home situations is very difficult for them. So there's some steps that we can take to get through this, and those steps are as follows, and to feel good and to be optimistic and confident and not to worry, be depressed or having the stress of the financial issues. The 7 financial habits of healthy people. Have a financial plan, have short and long-term financial goals, be taking active steps to achieve their goals, to have taken steps to protect the family from financial misfortune, pay off credit cards early, spend within their budgets, and work on their financial plan. Number 1, the financial plan doesn't mean that you've got to have a 50-page plan. It can be very short, it can be very simple. It's got to be yours. You need to work within your expenses and your income. And one thing that I would recommend is to do a financial statement each year and to know what your net worth is in a given year. Number 2, set short and long-term financial goals. People have a tendency not to plan well enough for short-term goals. That's paying off debt, saving for vacation, emergency funds. Middle-term goals could be a purchase of a house, a business, sending the kids to school, and then obviously retirement planning. Taking active steps to achieve these goals, analyzing your financial behavior and why aren't you, tracking spending, making sure that you're contributing to your 401k. I think the most important one here is automatic savings and payroll deductions to force ourselves to make sure that we're saving the money on a weekly, monthly basis to achieve our goals. Take the steps to protect your family's financial misfortune. Obviously, an emergency fund, which is a 3 to 6 month amount of money in a liquid account that in the event of an emergency, life and disability income insurance in the event of a catastrophe, and long-term care. Life and disability insurance is extremely important because you're your most valuable asset. Of course, paying off credit cards on a monthly basis and having a good credit standing. Don't use credit to live beyond your means. Credit cards are very expensive money. When we go out and shop mortgage rate, we shop it for the lowest rate. We don't shop it for the highest. In credit card, you're basically getting the highest rate. Spend within your budget. Save first and spend what's left over. Most people spend and then save what's left over. You've got to design a plan so you're saving for yourself first. Obviously, planning for larger expenses. And focus on your needs, not your wants. If you're saving and you can fill a short-term and long-term savings plan to get your needs, the wants will come. Work with a financial professional. It's proven over time that if you're working with a financial professional, because we're human, we're more likely to stick with the plan. If we're trying to do it on our own and we don't have a good process set up, it's not going to happen. One of the things that working with a financial professional, look for someone who cares about you and will ask the right questions. And I think the main thing to remember here, it's not about how much we have, it's what we do with it. The key is to be saving 10 to 20% of your income. And if you're not doing that consistently, you're going to wake up someday and you're not going to have what you plan to have. It's just not going to happen. So which one are you? Are you a goal setter, a procrastinator, a dreamer, or a pretender? So let's kind of go through these things. Can I have you guess what you are? And we're going to find out here in a minute. Okay, goal setters. Place priority on financial well-being. Know what they want for their future. Create detailed plans. Achieve the dreams. And need to review plans for rebalancing consistently. Procrastinators. Know what makes for financial health. They need to be talking to experts. They need to use the internet, and there are many sites to figure out where they should be with regards to debt and possible problems. Dreamers, you need to talk to a financial professional. You start with a simple plan and build up from there, and pay yourself first. And obviously enroll in your company's retirement plan, because that will help you save on a systematic basis. And then the pretenders, those false optimists, again, they need to work with a financial planner to think about their financial goals, determine how much money to save, and help motivate themselves to do so. So we're suffering from a series of money maladies. I think we're living in a dream world, and we have been, and certainly the economy over the last couple of years has proven that. Half of Americans don't pay their credit cards each month, so they're paying high interest rate. 81% say expenses are an obstacle. 20% report that over 75% of their monthly income is consumed each month, and 10% is used for short-term goals. 10% for toys. So remedies. Pay yourself first, most important. Set up a plan that automatically draws to pay yourself first between your 401k, your short-term savings, etc. Start up a future plan that can be short and long-term. Probably should be both. And then at the end, obviously a fund and reward yourself fund, a plan that you can go out and achieve some of the things you'd like to achieve and have some fun along with it.